Micromega has reported an 87% rise in headline earnings per share to 26 cents. The rise in operating margins attributed to the company's exit from the automotive sector. Joining us for a look at the numbers is the company CEO, Greg Morris. Hi, Greg.
Hello, David.
Well, that's 87%, partly explained over there. It's a small cap company, so when you have a big shift like that, it can make a big impact. It's not like some of the other big companies we've been talking about. But what's behind those numbers?
If I just go back 6 months ago, we came out of 2011 with a diverse portfolio of businesses, and we'd been in the automotive sector for 3 years and really had a significant drag on the earnings, as you can imagine, through 2008, 2009 and 2010. And we rationalized, we exited the businesses, we finally sold our last one this year, which was our battery business. And the result of that was the release of earnings to the bottom line. I mean, the companies underpinning the current earnings have always been part of the group. It's really that they were cross-subsidizing, the deficits we were seeing in the automotive sector.
Just tell us about the balance of the company to give us the picture. So now that slice of the pie is out, what does the rest of the pie look like, and how big a slice was it?
Really, it's now an intellectual property portfolio of businesses, primarily in the occupational health and safety space. And IT. That's what's left behind in the group. So low working capital requirements, people-based business. The real core drivers behind our earnings is our occupational health and safety business, NOSA.
Pause with the history for a moment. It's a strange mix of businesses. It's almost as if whoever was founding it or running it had an interest in, what was it, occupational health and safety? What was the other one?
It was financial services, support services.
And automotive. What was the combination there?
David, it's very simple. We listed it 10, 11 years ago now, and it was really about our initial investment capital was rather small. And so what we did is we bought businesses that were cash generative, but obviously we could only afford to buy businesses of certain size and certain scalability. And we took a diverse view to create an engine room for generating cash that could ultimately allow us to buy the right size opportunities as they came along. And so that took a long time. We used our paper, we used the capital, we never geared our balance sheet. And we just took a view that we had time on our side. There was no reason to chase the share at all. In fact, this is only this year that we've really come onto the radar and spoken about the businesses to the market at large. And so it was really about cash generating capabilities within the operating account. And once I was there, we then refined it back to our core competences, which were really around the intellectual capital opportunities. And technology is an area that we're very excited about. It's an area we understand. And then the support service side, the occupational health and safety space, it's a great arbitrage opportunity for us at the moment. There's legislation coming through that's quite aggressive. We're seeing the trend towards the preservation and sustainability of organizations, and that's an area that we have focused on.
That's an interesting one. I don't think I've ever talked about occupational health and safety as a market which investors need to know about. So what are the things that you look at? What are the measures? What is it? What's the stuff of the business, the nitty-gritty?
Well, it's the cornerstone to occupational health and safety practices is legal compliance. And what's happened typically with legislation is it's really been big barking but no biting. And we've seen a global trend where the legislation has moved towards what I regard as manslaughter acts, where in fact there's genuine accountability at board level for incidences in the workplace. And South Africa's lagging on that legislation. It's coming through. We are seeing drafts of it, and it will make its way into industry at large with due course. But where we are right now is we've seen a level of responsible behavior coming through, and the service providers behind it are fairly shallow. It's a new industry. NOSA has been around for 60 years, born probably 60 years too early, but it's been around, and of course we've just seen the natural take-up.
That's the National Occupational
Safety Association. Correct. And we've seen the natural take-up, and we're enjoying it. 102% growth year on year out of that business. There's no indication that trend is going to change. Obviously the numbers in nominal terms get slightly bigger, but our order books are full going into 2013. The requirements and demands on the business are extensive. We're getting asked to diversify that portfolio.
That could raise questions of its own. You've said you've taken out some of the costs from the automotive, but in a way you've changed the business substantially.
Correct.
There's demand, but there could be costs, there could be skills issues, capacity issues in changing that.
It's undoubtedly a real factor for us. We could grow the business substantially quicker, but we wouldn't be doing it with the requisite competence that we're trying to instill into the industry at large. I think NOSA's got a real opportunity of setting the benchmark standards in terms of service delivery and the quality of the individuals that are doing it. We've built a capacity of 260 skilled individuals within our business. That's growing, but we're managing it. We could certainly accelerate a lot quicker, just bringing people through the business at a more rapid rate. but then that would compromise the industry at large. And so we're taking a pragmatic view. Our sunk cost in terms of infrastructure, we've got a national grid of offices across most of South Africa. We've got the internal capacity that's servicing the book at the moment. Having said that, we've fully booked through to the end of the year. So in terms of our training academy, which we anticipate to train 42,000 people in this year, we would love to accelerate the delivery of that training because we're getting the orders, people are wanting to come on the courses, and we're having to push them into October, November, December, and into next year. And we'd love to accelerate that, but we would be doing that at the peril of quality.
Looking at the year ahead, looking at the broader economy and the environment that you're operating in, what are your prospects? And what are your views on where we're going?
Just to cover the first part, we feel relatively comfortable on what we can do, and I tell you why I say that. We're diverse firstly. Secondly, we're providing services onto the continent and onto other continents. So we've got a complementary set of earnings coming out of hard currency and soft currency environments. Our businesses are relatively small. We're not geared. So we're feeling comfortable that we could sustain any downward turns. We've come off the back of downward turns. Our businesses are also well positioned. We're seen as cost reduction mechanisms. The cost of an incident in the workplace is significant. So as people look at their cost cultures, they're looking at margins. As a consequence of the broader picture, we're seeing a take-up of people wanting to address those issues. So the same with technology. People are wanting technology to work harder for them because of the cost of manpower. So we believe we're well disposed. As far as the broader economy goes, I think we're all sitting with the same view. We are sensitive to it. We're very, very cautious. We'll remain cautious for at least the next year or two. There possibly could still be surprises. Having said that, we also can't sit on our hands. We've got to invest and we've got to take advantage of opportunities.
And you do know that what you're doing is needed. So there's
Absolutely.
no question that demand is there. And in some other areas of the economy, companies have not got the demand,
Correct.
but you certainly have.
Correct.
We'll have to stop there. So thanks to Greg Morris, the CEO of Micromega.